Indeed, it's Happy Easter, Chamberlain. I don't know where you're getting Happy Galilee from, but it's happy holidays from Business Morning on Sunrise Daily. Yes, markets are closed. A lot of the markets are closed, but guess what? We're still spending money, and some people are still making money. In the oil market, for instance, trading is still going on. So we'll give you updates on that as oil prices rose today, adding to recent gains and expectations of tighter supply from OPEC Plus cuts, attacks on Russian refineries, and upbeat Chinese manufacturing data supported outlooks for improving demand. And so that's why we see the prices gaining. Let's look at the numbers for that. Now we see for Brent, it's 0.3% in the green, $87.29 a barrel. For WTI of America is $83.48. That gains 0.4%. Trade volumes are expected to be thin today, expectedly, as several countries are closed for the holiday. Both benchmarks finished higher for a third consecutive month in March, with Brent holding above $85 a barrel since the middle of last month, as OPEC Plus, their allies, pledged to extend that production cut, squeezing supply and hiking price. That is a major driver of the price. Now, still in the global space, Chicago Board of Trade corn inched lower on Monday, weighed by a report of multi-year high stocks, despite expectations of lower planting in 2024. Let's look at the numbers, the prices there now. We see that CBOT corn was down 0.6% for $4.39 for that's a quarter of a bushel. That's for corn. And then also we see that the U.S. Department of Agriculture in quarterly grain stocks report last week said that stocks of U.S. corn as of 1st of March swelled to 8.34 billion bushels, the most active in 5 years. The price of wheat also dropped 0.31% to $5.58 for half of a bushel. Many Ukrainian farmers could increase their area sown with soybeans this year by 23.5% to 2.199 million hectares from a year earlier, while reducing the corn sowing area. Romania is also in the news. European Union's fourth largest wheat producer and the third largest for maize reaped 9.6 million metric tons of wheat in 2023. Yeah, so we kind of forget, of course, the celebration of the season, which, of course, is Easter. It's for Christians, but everybody is affected. Unfortunately, this year for Nigeria, the celebration is low-key for many families because of the macroeconomic realities. Inflation is not just in numbers. It affects the prices of goods, food and non-food that we use every day. So our correspondent in Port Harcourt, Deborah Agbalama, went to spend the Easter yesterday with a family to see some of those realities of the numbers we talk about here.
Worshippers in various centers exude radiance, celebrating the resurrection of Jesus Christ within the Port Harcourt metropolis. We ventured to explore if this jubilation extends to low-income families. We encountered the Pepple family returning from church and asked to share their Easter afternoon with us. Mr. and Mrs. Jonathan Pepple graciously accepted.
Oh, house service. We'd like to go with you to see how your Easter is, how you're celebrating today.
Thank you. Let's go.
Residing in the Alikaya area of Port Harcourt, we head to their abode. Upon arrival at their home, it was apparent that the day hadn't unfolded as expected. Mrs. Peace Pepple explained they hadn't prepared a meal. Hastily decides to whip up something simple for her children.
it's not been easy for especially family people right now, like myself. For this last Sunday, we have not cooked anything. We are just coming back from church. So the money I was expecting for my family to use to celebrate Easter, the money came in while I was in church. So my wife will soon go out for the market to buy things for my children so that they will use to celebrate the Easter the way it's supposed to be.
Mrs. Pepple, determined to provide for her family, heads to the market, where the reality of inflated food prices becomes palpable.
Before we can buy this with 1,000 naira, it's not, it won't go up to 1,000. But now, this is going to 3,000 plus.
Despite the challenges, Mrs. Pepple maintains a cheery look, determined not to let the country's situation dampen her Easter spirit.
Things are really, really expensive. These are the things before you can buy something that can fill a sack bag for 1,000 naira, but look at something of 8,000 naira. It's not even half of this bag. So please, government, help us.
Their sentiment resonates with many, including Mr. Pepple, who echoes the widespread belief that the government could do more to alleviate economic hardships.
And then to have everything it takes to make this country great, to have the manpower, we have the money. The money is there just to think about the people or to think of the people. That's the only thing I would tell the government. They should have the people in mind. Everything is solved.
For the family of Mr. and Mrs. Jonathan Pepple, it is not such a rosy Easter celebration. Sadly, this might be the case of lots of Christians marking the Easter celebration in Nigeria today. Mrs. Jonathan had one plea. It is for the government to come to their aid. The government seems to be doing their best, but looks like their best isn't yet good enough to solve the problem of high cost of living. From Port Harcourt, the River State capital, Deborah Balama, Channels Television News.
That was Deborah there giving us some of the realities to the numbers that it seems sometimes those numbers do not just add up or they don't mean anything. Well, it certainly means something. Inflation at over 31% means that bag is not even up to half full anymore. Thank you so much, Deborah, for all of that. Well, now let's go to another matter which started last week. That's the recapitalization of banks. And yes, we've been talking about it since Friday, but the banks have 2 years, 24 months to catch up and meet up with the requirement. Now let's get the perspective of the Association of Senior Staff of Banks, Insurance and Financial Institutions, as BFI. We have their president joining us virtually now. We have Mr. Olushoji Oluwole joins us virtually, even is from Lagos. I know the holidays would not allow you to join us physically, Mr. Olushoji, but thank you so much for your time and happy Easter.
Happy Easter to you, Amy, and to all our viewers.
So this shouldn't come as a surprise because the central bank governor has given us hints on this many months ago. But what is the perspective of BFI on this? I mean, you guys are your members are directly affected by this.
Yeah, thank you very much. Just like you said, it didn't come to us as a surprise. He had hinted it when he spoke about the having a strong banking sector in a $1 trillion economy like ours in Nigeria, which is what the government is expecting to happen. So since he made that pronouncement, it's something that I know that institutions had started preparing for. So the information coming didn't come as a surprise to us, setting out the plans. Now for us as BFI, we are very much aware of what has happened in the past during such recapitalizations, the last being in 2005, when banks were expected to move on from 2 billion to 25 billion naira. We know that some banks were able to pull it through themselves, some had to go through mergers, some through acquisitions, and it had its attendant impact on employment of workers. And because of that experience now, we also had proactively acted by informing the CBN and the Ministry of Labour, as well as our labour centres, of the likely impact on our members, because when these kind of things happen, we know that there are some cases where, due to duplication or excess manpower, there are job losses. And we expect that there will be a lot of fairness in the actions that will be taken, and to ensure that our members are well protected, and where they are affected, they are well compensated.
Yeah, because I was going to ask you about how true the fear or threat of job losses, saying that, we're expected to see mergers, acquisition, upgrade of banks, even though there's also the expectation of downgrade. But how fierce is that fear of job loss in the financial institutions?
Well, this is something that is just unfolding. So whatever we say now will be based on what we have heard now. So our perspective will change in future. Now, if we look at it in 2005, there were almost 100 banks. Today, we have barely 24, 25 banks in Nigeria. And when we look at the raising of capital at that time compared with now, it's a totally different thing. At that time, I cannot say that the interest in stocks was as intense as it is today. Now, if we're talking about acquisitions, we have 24, 25 banks. How many are actually going to acquire? That's one. Two, we have banks that are in different areas of the economy, different areas of businesses, just like we'll find in the CBN circular. We have banks that have international licenses, those with national licenses, and those with regional licenses. They run totally different businesses, so to speak. So it's not going to be the way it was at that time. Now, given the 2-year timeline to achieve this, there is actually that probability that banks may just be able to pull it off and raise the minimum capital that is required. Or, in another breath, they could come together with measures that will actually make them bigger and not have the kind of impact on staff that we had in 2005.
I hear some news that 11 banks are actually, threatened. How many banks do you see surviving this when you look at the sizes? I believe the tier 1 banks, could easily scale through, but maybe the tier 2 and all of that. How many banks do you see making it through out of the 25 presently in existence?
Well, it's not something that I can really make a pronouncement on or speak on right now, because like I said, the moment the CBN governor made that pronouncement, a lot of banks had started making moves to start increasing their capital. Now, mind you, bear in mind that banks today are not do not have a capital base of just 25 billion. Over the years, they have increased it to various amounts. Now, if we're talking about the tier 1 and the tier 2 banks, remember also that in the tier 1 banks, we have those who have international licenses. So you will probably find out that what the international banks may have to raise is way above what the national banks have to raise. And like I said earlier on, the interest in stocks in 2005 is totally different from now. People are more enlightened, people are more interested. We've seen some kind of stability in the Naira in the last 1 or 2 weeks now, which means that there are also foreign investors who may be involved. So for all you know, banks may actually end up being oversubscribed at the end of the exercise, but that does not eliminate the fact that those mergers could occur. So I think in the next couple of weeks or months, we'll begin to see where they are and begin to see the plans that will be rolled out, just like the CBN has directed, that they want to know what the plans are. So and we're at a time when banks, banks have uniform financial year ends. So about this time now, we're going to begin to see the reports of last year, and we'll begin to see what it is actually that is in place. Then we'll be able to talk about the possibility of being able to raise the kind of money that is required by June. I think it should be June 2026.
Yeah, Mr. Oluwole, just before we let you go, and briefly now, so all of this is to make a bank stronger and be able to, lend more to the real sector. But I mean, I kind of have to remind myself that more liquidity in the banks does not automatically mean more funding to the real sector. We have CRR, we have NPR, all of those are on the one hand. And then we also have the issue of banks maybe not trusting some of those sectors enough. How can we translate more liquidity in the banking sector to more funding to the real sector?
Well, banks are in the business of lending. That's their primary purpose. So banks not wanting to lend, I don't think that is going to happen. And remember that banks are expected to give out a certain percentage of their liquidity as loans, failing which the balance will be sterilized by the CBN at no interest. So it is not in the interest of any bank to want to hold on. Now, when we talk in terms of trusting the various sectors, now that is where a lot of regulation is going to come in. We find ourselves in a situation where a simple regulation or a simple legislation could actually put a lot of these credits at risk in the banking sector. I'll give a simple example. Recently, Lagos State passed a law on styrofoam packs. Now, imagine if a bank had invested heavily or given a heavy credit to an organization that was just about to set up a plant somewhere in Lagos, factories had been built and everything. It simply means that there is going to be a problem. So that is the kind of challenges that are usually faced by some of the challenges that are usually faced by the financial institutions. So yes, they are very ready to lend, but of course they have to ensure that the funds they give out are well utilized and are secure, especially when thinking of the depositors and the capital that they are giving out.
Okay, thank you so much, Mr. Olusoji Oluwole. He is the president of Association of Senior Staff of Banks, Insurance and Financial Institutions. Thank you, and happy Easter once again.
Thank you.
All right, let's move from the banks to commodities. And one commodity of interest for us today is palm, the palm plantation that we have in Nigeria. And once upon a time, Nigeria was the largest world producer of palm. But today we have gone down to the 5th, overtaken by countries such as Indonesia and Malaysia. And guess what? Malaysia got it from us. But anyway, let's delve into this with someone who is very active in that sector. He's the Managing Director and Chief Executive Officer of Okitipupa Oil Palm PLC, Mr. Taiwo Adewale. Mr. Adewale, good morning and thank you so much. Happy Easter to you.
How are you?
I'm fine. Happy holidays to you, Mr. Adewale. Could you move forward, please? Thank you so much. You're welcome to the program. So, unfortunately, Nigeria has lost that position it held for a long time, which is holding. I think we have to hold on a minute for Mr. Adewale. Nigeria is now the 5th largest, and according to data in 2021-2022, Nigeria's oil palm production averaged 1.4 million metric tons and 1.3 million in 2020. This is despite improvements in the production. Unfortunately, Nigeria has lost that position that it held for a while. So together, Indonesia and Malaysia, by far the largest oil production in the country, and they make up about 85 to 90% of total production of vegetable oil. Other countries like Colombia, Nigeria, and Thailand also are doing this. I think we have Mr. Adewale now. Good morning, Mr. Adewale.
Good morning.
Yeah, happy Easter.
Same to you, madam.
So what's happening? Okitipupa is one of the companies in the country that is supposed to make the most of our oil palm plantation, which is something that is rich. We used to lead the world. Unfortunately, we are number 5 now. What is happening in that area? We know that the country has, we talked about mechanized farming and things like that, you know. So what are some of those militating factors to stop us from regaining our position as the leading oil palm production in the country?
Yeah, I'm sure you will recall that Nigeria used to be a leader in the oil palm industry. We were leading the world many years ago, prior to the oil boom, and we became a distraction to the country, the entire country. I think the situation in Nigeria today has just opened our eyes to see that we need to get back to the plantation.
Our eyes really open because we don't see concentration. We don't see, you know, intentional movement, you know, back to agriculture. Yeah,
well, that is the only road that we can get back into now, with all the challenges that other industries are facing. And Okitipupa, for example, we have taken very drastic measures, you know, to get back into production, reclaiming the plantations and investing heavily in it. And the results will begin to show in not too distant time.
When we say the result, what are we expecting? We are expecting oil to be cheaper because palm oil, vegetable oil, none of that is cheaper this time.
No, it is not in terms of it becoming cheaper, of course, but in terms of more production coming from Nigeria. I think a lot of investment is going into oil palm. In Ondo State, for example, a lot of investment is going into oil palm development, plantation development. We have the red gold. There's a target 100,000 hectares. And for us in Okitipupa, we are supposed to be a leader in that sector. And so you find that the rejuvenation of our plantations is currently ongoing. And I believe that the output will contribute significantly to the quantum of oil SPO that will be produced from Nigeria maybe in the next couple of years.
Oh, so we still have to wait for years. I was hoping you would say by the end of this year we'll start getting supply. You know?
And that is the truth, that oil palm is a long-term cropping. It takes about 5 years from seedling development to maturity, and until you get to that point, you don't start getting any revenue from it. So I think our focus right now on getting the plantations back is a welcome development.
So we're looking at like how many years to start feeling the impact?
Well, you know, not as long as it has been abandoned in terms of, I mean, when I'm talking about Nigeria now, abandoning agriculture. I think one thing that should be very clear to us is that the results of going back to agriculture is probably the key way to solving Nigerians' problems in terms of employment, in terms of revenue generation, in terms of IGR for state. So I believe that the decision that we're taking today, we just have to wait about 3-4 years. I'm sure it's shorter than the last 30 to 40 years that we have.
What about other derivatives, you know, of it's not just oil?
Yeah, you know, the oil palm is a multi-product plant that gives you several derivatives. You have kernels, you have kernel oil, you have a whole lot that can add value once you are able to process, you know, the fruits, both oil, kernels, shells. All of them are useful, you know, providing raw materials for various sectors of the Nigerian economy.
And we expect this, of course, to feed into those other sectors.
Yes.
Cosmetic, for instance.
Oh, yes.
Yeah.
Oh,
what
not just cosmetics. The noodles you consume, they are oil-based products. Margarine, the soap. So if we get back the plantations, we can get a number of these industries that are having challenges today. I mean, look at Unilever, look at Nestle. If the base products that they need, if we're able to provide them, then they won't be doing a lot of import. I'm sure you know that the results from many of these companies today wasn't that good. Yeah, so
yeah, the FX factor.
Yeah, the FX factor. But if you can produce them locally, you don't have to depend on. You don't need foreign exchange to bring those products in.
Okay, so what's the plan? Are you in talks with them? Or is it until you are supplying, or is that when you get them?
No, we should get our own house together first. Get the plantations working, producing enough fruits. Malaysia, for example, has over 1 million hectares of oil palm plantation. We're not in there.
What's your target?
Well, if Nigeria can do about 2.4 million hectares, I think that will take us. That will bring significant growth and make Nigeria a great contributor to the global oil palm.
And this potential is not just in Ondo State.
No, not just in Ondo State. There are 24 states that have suitable soil that can support the oil palm plantation development. Several states, even in the north,
Yeah,
so,
recently you did talk about establishment of commodities boards.
Yes.
What do you mean by that? Are you talking of price control? Because that is a sensitive matter.
Very sensitive, and I don't think I want to delve into that today. But I believe a more organized product or commodity sector.
What do you mean by organized?
Yeah. The farmers who are really producing these commodities or products should actually be in control of those products, right? Maybe in synergy with other regulators, so that they can fashion out a system that gives adequate reward to them. I think so that they get the benefits of their labor.
Sounds like you're talking about eliminating middlemen.
Yeah,
so middlemen is still a problem in the agricultural
of course, value chain. Yeah, of course, it is. It is, and they exploit it.
All right. Thank you so much, Managing Director, Chief Executive Officer of Okitikupa Oil Palm PLC, Mr. Taiwo Adewale. Thank you for your time.
Nice meeting you.
Enjoy the rest of your holiday.
Yeah, thanks, sir.
All right, so once again, another sore part for us in Nigeria. Products that Nigeria used to lead the world in production, we're now number 5. How can we get that back? Well, Mr. Adewale promises that his company is trying to do that, but I guess we cannot leave it to them alone. But that's it for Business Morning on Sunrise Daily. You're still on to the program, but we head to the Sunrise Daily studios. Guys, back to you.